Retirement in America is facing a critical crisis. Many individuals, especially those nearing retirement age or already retired, are struggling to make ends meet. The foundation set decades ago through legislation aimed to secure retirement for Americans, such as the Employee Retirement Income Security Act, has only partially fulfilled its promise. While it was designed to set minimum standards for retirement plans and protect workers, it doesn't require employers to offer these plans, leaving millions without adequate retirement resources. One major issue is the decline of traditional pension plans. In the early 1990s, around 35% of private employees participated in defined benefit pensions, offering lifetime income streams. Today, only about 11% of employees have access to such plans. The shift towards 401k plans, while beneficial for some, often leaves those without employer matches or sufficient contributions at a severe disadvantage. Adding to this, small businesses often find retirement plans too costly and complex, avoiding them altogether. This leaves many employees in these sectors without a safety net. The burden then falls on Social Security, but for most, the payments are insufficient to cover basic living expenses. Medical and credit card debt are also major obstacles. Federal Reserve data shows that debt among those aged 65 to 74 has more than quadrupled since 1992. For those over 75, debt has increased sevenfold. This debt burden makes it difficult for retirees to cover their expenses, especially with healthcare costs continually rising. Statistics paint a grim picture. About 45% of Americans retiring at age 65 are projected to run out of money during retirement, with single women at the highest risk. For many, unexpected expenses like assisted living in nursing homes, costing an average of $75,000 per year, are crippling. Without adequate planning, these expenses become insurmountable, pushing more seniors into poverty. The National Retirement Risk Index highlights that nearly 42% of today's working-age households won't be able to maintain their standard of living in retirement. And more than 12 million seniors already live in poverty. The homeless population among those 65 and older is expected to triple by 2030. This is not a minor issue, it's a growing crisis affecting millions. So, why are we here? The costs of essential services like healthcare and housing have skyrocketed, while wages and retirement savings have not kept pace. Many seniors are forced to downsize or rely on their children for financial support. This creates a vicious cycle, where younger generations also struggle to save for their own retirement while supporting their parents. While the outlook may seem bleak, there are steps individuals and policymakers can take to mitigate the crisis. Several states have implemented auto IRA programs requiring employers without retirement plans to enroll workers automatically. These initiatives help more people save, but it's not a comprehensive solution. Universal retirement savings systems could be one way forward. Every worker should have access to retirement savings, regardless of their employer. State-facilitated IRAs are a start, but a national system could provide more stability and security for all workers, ensuring that they can save consistently throughout their careers. Such a system could also help bridge the gap for those working in gig economies or part-time jobs, where employer-sponsored retirement plans are rarely available. By offering universal access, we can ensure all workers, regardless of their employment type, have the opportunity to save consistently. This could significantly reduce the disparity seen between different sectors and economic groups, leveling the playing field for millions. Additionally, there is a push for auto-portability of retirement accounts. This would allow workers to transfer their retirement savings seamlessly when they change jobs, preventing them from cashing out their funds prematurely. With penalties and taxes on early withdrawals, too many retirees lose out on the benefits of compounding interest. Auto-portability could be a game-changer in ensuring retirement accounts grow steadily. This would not only prevent leakage from retirement funds but also simplify the process for employees who frequently change jobs, reducing the administrative burden. By keeping funds growing in tax-deferred accounts, workers can benefit from compounding interest, which is essential for long-term savings growth. Studies suggest that auto-portability could potentially increase overall retirement savings by billions of dollars nationwide. Another approach is revamping the 401k system to help retirees use their savings effectively. Many retirees freeze up when deciding how to withdraw their savings, fearing they will run out of money. Simple solutions like annuities could provide predictable income streams. Annuities, while not perfect, offer retirees a guaranteed monthly paycheck. However, choosing the right annuity requires understanding the costs and limitations, such as inflation adjustments. One solution could be implementing standardized withdrawal options within 401k plans, allowing retirees to receive payments similar to pensions without confusion or hesitation. This would eliminate much of the guesswork and fear associated with depleting retirement funds too quickly. By also integrating tools that guide retirees through the tax implications of their withdrawals, more people could maximize their income without unnecessary financial stress. Fixing Social Security and Medicare is essential as well. The projected depletion of Social Security funds in the coming decade could result in benefit cuts, impacting millions of retirees. Raising payroll taxes or other adjustments could help stabilize the system, but it requires political will and public support. As for Medicare, expanding coverage to include long-term care could prevent seniors from impoverishing themselves to afford necessary services. Without intervention, the impact of reduced Social Security benefits could force millions to drastically cut their standard of living. Solutions could include gradually raising the retirement age, increasing the payroll tax rate, or adjusting benefits based on income to protect those most at risk. Medicare expansion, especially for long-term care coverage, could alleviate the significant burden healthcare costs place on older Americans, improving their overall quality of life. Early education about financial planning is another critical solution. Younger generations need to understand the importance of saving and investing for retirement. Providing financial literacy programs and making retirement planning part of school curriculums could create a more financially secure future. Research indicates that individuals who receive financial education early in life are more likely to participate in retirement plans and accumulate higher savings over time. Incorporating mandatory financial literacy courses in schools and offering free workshops for adults could dramatically enhance the public's understanding of investing, budgeting, and retirement planning. This proactive approach would empower future generations to avoid the financial pitfalls facing today's retirees. In summary, retirement in America is facing significant challenges. But with proactive planning, better policies, and a commitment to education, there are pathways to avoid disaster. It's crucial to act now to secure a comfortable retirement for yourself and future generations. Beyond the immediate financial concerns, there are also social and emotional impacts as retirees face uncertainty about their long-term well-being. Many are forced to delay retirement or take up part-time work to fill income gaps, which can affect their health and quality of life. Furthermore, the strain of inadequate savings is not only a personal issue but a societal one, as government resources and social programs may become increasingly stretched. Addressing these concerns now is crucial for sustainable, long-term solutions. Retirement doesn't have to be a disaster, but it does require action. Make sure you're prepared by planning, saving, and understanding your options. Meanwhile, if you found this video helpful, don't forget to like and subscribe for more tips on securing your financial future.